Hello, everybody. Welcome to the Local Logic Masterclass. I appreciate you joining us. Let's go ahead and introduce ourselves. I am Audrey Whittington, the Senior Vice President here at Local Logic. I'm going to go around in my vision. Madeline, can you introduce yourself real quick?
Yep. I'm Madeline Mordarski, and I'm the Chief Marketing Officer over at the Kai's Company in Florida.
Great. I'm going to go to Cal.
Cal Inman, CEO of Climate Check, or a climate risk information company.
Okay, Lauren.
I'm Lauren Renteria, and I'm an insurance broker at Steel Insurance Agency in Southern California.
Thank you. And Ryan, last but definitely not least.
Ryan Pappy, President of Kai's Insurance in Florida.
Fabulous. Thank you, guys. So, what we're going to talk about, and the title of this, let me kind of read it exactly, is Climatizing the Deal, which is how wildfires, hurricanes, and rising premiums are reshaping residential real estate. So, the point of this please, by the way, do submit any questions you might have in chat. I will read them as we're going. But the point of this is really to talk about the major climate risks associated with the home buying process. Okay, so let's first kind of talk about what types of climate are most likely to affect insurance. I think we all know the obvious ones, but I think it's an honor actually to have two insurers with us, especially. But what do you guys see? What is the major ones? And then I'll turn to Madeline as well, because there's a difference. One thing we've been talking about is the difference between what Cal is a climate data provider as towards climate risk. There's a difference between the data he provides and what is going to really affect your real estate transaction. Lauren, I don't know if you want to go first, but what do you see largely in California besides, we state the obvious and maybe something not obvious?
Sure. The major one, of course, in California is wildfire. I mean, it's every year we're seeing it in summer, sometimes even outside of summer. We're also facing drought, which is affecting the soil. So shifting soil, landslides, that kind of thing. Earthquake is another big one. We haven't had a big quake, but with the softening soil and then shifting earth, earthquakes.
Don't jinx us,
it's becoming a problem.
Yeah.
Say that one more time.
Don't jinx us. Okay, so for California, we kind of have the obvious. We have fires and earthquakes. And you're not getting a lot. You're not getting flood even as a result of those type of things, right? I mean, generally it's pretty dry. California would love more floods probably for water purposes, but is that correct?
We generally don't have a lot of flood, but surprisingly, we have had a couple of what you would consider flood instances. We're calling them atmospheric rivers. And it's been the last couple of years, we've had, I want to say, 4 atmospheric rivers. So it's coming from the sky, but creating flood insurance claims.
See, I'm glad I asked. All right, Ryan, what about you?
Certainly in South Florida and anywhere on the East Coast and southeastern coast is hurricanes. One of the things that people may have a misconception about is flood insurance. Flood insurance isn't as big of a hurdle, or floods aren't as prone just due to the limestone bedrock. Miami, especially some of the areas in South Florida, were very recently built historically. So most of the homes have been built in the last 40, 50 years. So they have a lot of canals and drainage, things that help the overall cost of flood insurance and the likelihood of a flood. And the one that is surprising is probably tornadoes. So we don't get massive tornadoes like you get in other parts of the U.S., but we get frequent little tornadoes almost on a weekly, monthly basis that will affect one of our clients. So hurricanes, tornadoes, and then lastly, probably flood.
That's so interesting. It's funny, on the prep call, we didn't even talk about tornadoes. And I guess I could have had somebody from the Midwest, right? Especially some of my friends in Kansas and Illinois and Indiana and Oklahoma really represent heavily for tornadoes. And even actually in the Northeast, tornadoes are to your point, are a thing. Madeline, before I go to Cal, and he talks a little bit about just climate risk in general in terms of the way they view it as a company, do you find that is there anything else you get asked about that's a bit obscure or on the brokerage side that really derails the transaction, or have we pretty much covered it?
No, I mean, I think we've covered the major events. I think there's more focus now more than ever on these events. We're having more billion-dollar events than ever before. I think 2023, there were 28 billion plus dollar events. 2024, there were 27. And so it's creating... B with a billion, yeah, billion with a B. It's creating risk that is unavoidable, but it's something that we're navigating through rather than navigating around. I think everyone's risk tolerance is unique. And you see, real estate agents getting more involved in the conversations on, climate scores versus flood zones, what's insurable. I don't think it's deterring buying. 1000 Watt actually recently did a study with millennials. Millennials make up 38% of all home buyers today. And they found that 75% of that group believed that home ownership and buying a home is inherently risky, but 50% of that group roughly still decides to move forward. And so I think it's just the world that we're living in today. And it's something that we kind of partner together to figure out how to educate and get through.
I think that's so interesting. I think that, again, another point we didn't discuss earlier, which was just in time things we would talk about, is we didn't talk about like the generational differences of how to look at it. I mean, it is Earth Day, and I have been surprised. Actually, I was scrolling through social media earlier this morning, and there wasn't a lot about Earth Day. And I do wonder but I can say, having three children in their 20s and 30s, like, they're very aware, and all my nieces and nephews are super aware, and even my mother, who's now older, is more aware than she used to be and is much more vocal about it, interestingly enough, than perhaps she was at any point growing up, worrying about throwing away the plastic bags or things like that. And as a result, the more people talk about it, the more I find myself being more careful and aware. So I think that's an interesting point. Like, they're moving forward, they're buying anyway. Maybe they expect that there's a cost associated with the way the planet is changing, right? To your point. All right, Cal, on that note, climate data. You guys are one of the top purveyors. And what is your thought about, like, what are you getting asked for? Do people come to you and say, I know you can again, we don't really do infomercials here, but you please feel free to like say what you cover, and like, are you getting asked to cover tornadoes? Does that come under storms, I think, right?
Yeah, no, tornadoes does get every time there's an event, right? Like these recent events, we'll get a lot more interest in that specific hazard, particularly if there's loss around it, right? It creates awareness. I mean, to your point about younger buyers, there's more awareness around all of this stuff in the news cycle, and we understand, see what's going on in the Midwest, see what's going on in the Southeast, see what's going on in California. So I think just that general awareness of these disasters causes more interest, and it's cyclical for us. We see all of it. But I think there's a lot of great providers of this information, just general climate related information from the government, academia, and just lots of good groups doing good things. I think generally we think about it in two big buckets. We look at these things called chronic hazards. So how is heat and precipitation changing over time into the future, 10, 20, 30 years out? And then these loss hazards, these acute hazards. And we bundle them up as high wind, either inland winds or hurricane winds, flooding, and there's lots of causes of flooding, and wildfires. And those are what we call these acute hazards that causes loss to buildings. And I think it's creating kind of immediate costs for homeowners, not only when events happen, but insurance costs, etc.
And not to go down the rabbit hole with you too much, but it'll segue back to Lauren and Ryan, which is when we talk about where you get this data, whether it's FEMA or a mix and things like that. You mentioned that the insurance providers don't typically take advantage of this data really aggressively. They may display it, like I know we just did a deal together with a major insurance provider that they want to display it to consumers, but they're not necessarily factoring it in to their risk calculations, correct? So what's your experience with that?
Yeah, I mean, look, it differs depending on who you're talking to, and be super interested in kind of the insurance side of it. But generally, you can think of our climate risk data as very forward looking, like I said, 10, 20, 30 years out into the future. When you get an insurance policy, you're covered for the next 12 months. So they're pretty dialed based on historical information, catastrophic risk models that go backwards to understand, hey, what's going to happen over the next 12 months and how do we price that risk appropriately? So the two different pieces of information are telling kind of different stories over a timeline.
Is it a question of accuracy, though, as it relates to historical data?
I think there's different inputs to both of them. There's different precision, different accuracy to both of them, and much different temporal look, like where we're looking at over time.
Okay. Well, we're going to, in a minute, we'll talk about sort of the display of climate risk data and how it affects the home buying process. But to pivot to Lauren and Ryan a little bit, for insurance providers, can you give us a sense a little bit? I'll go to you, Lauren, first, of the matrix that goes into deciding how much a company, and I think you're both insurance brokers, just to be clear for the audience, but how much, what goes into deciding how much we're going to charge for, this type of insurance?
Yeah. So insurance companies base their rates off the law of large numbers, and it's many, many factors. So it could be how many claims they've had in a certain area, what the age of the home is, the saturation, like how much business a company has in a certain zip code or county. And if they want to be in an area that they see profitable, the rates are going to be more competitive. If they're oversaturated, or maybe they've had a lot of claims in a certain area, or they see something as a risk factor, whether it's a natural hazard or
Yeah,
something
and you might
else.
want to talk about the
Like,
NHD for California a little bit and how that factors in the National Hazard Disclosure.
sure, yes, NHD, natural hazard disclosure, is something that only for California, and it's something that a seller has to provide to potential buyers, saying if their home is in one of the, it's like 6 major natural hazard risks. So it could be a flood zone, fire zone, it could have to do with a seismic zone, and I think there's maybe a couple others that kind of teeter on that. But so they're having to disclose if the home is in one of these areas. Could be an indication to how costly insurance is going to be, especially if it's in a fire zone. Also, if it's in a flood zone, the mortgage company might require that this buyer obtain flood insurance.
And for Madeline, before I go to Ryan, is there any disclosures that you're aware of that are equivalent for Florida?
Not that I'm aware of, no.
Okay. So, and I know what we talked about earlier was that the thought was that this NHG would be nationwide, and it never quite made it. And I suspect it might not. But it is interesting because I would think, Madeline, that if it was in Florida, it would, I don't want, I hate to say raise alarms, but I mean, some people don't look at what they sign, but they might be like, oh shoot, what is this? Right. Ryan, what's your experience in terms of trying to calculate these kind of claims for, maybe it's different for Florida, I don't know.
So before I jump into that, I want to just point out, and I'm sure the people in California can appreciate this. In Florida, we have no state income tax. And the reason for that, and to the point of how the different generations have decided where they want to live, is because in 1927, Miami got wiped out from a hurricane. 35, Miami got wiped out for a hurricane, and the only way that they could entice people to come and live here and to rebuild was they promised that there would never be state income tax. So that's been going on for quite a long time. The state income tax today is hidden in the cost of property insurance. So I agree with Lauren on all of the real risk factors. So location, age of the home, construction type of the home. But in Florida, we have two separate policies. We have the hazard insurance, which is for anything other than wind. And then we have windstorm insurance. And that windstorm insurance is really calculated based upon the reinsurance rates that all the carriers are getting out of Bermuda or getting out of London. That drives the price for the windstorm insurance. And then we have a separate for hazard, which are other things for flood or water claims, not a flood, but pipe bursting in the house, vandalism, theft, all that type of stuff. So there is two really, they can be combined with the same carrier, but they're separate policies, separate deductibles, and which I don't know if that's the same way in California, but certainly in Florida, it's different than most of the other parts of the United States. Flood insurance is another one. Flood insurance is also a concern, and that's obviously based on the elevation of the lowest part of the structure. But flood insurance in Florida, although it is often portrayed as a big risk, it's not priced that way because it's not the reality of the situation within the state of Florida. We very rarely get floods, especially without windstorm. And when you have the windstorm creating the flood, it's a little bit different on the claims. So most people that come to Florida, their first concern if they're moving in is, oh my gosh, what's the flood insurance price going to be? And at the end of the day, flood insurance hardly ever kills the deal in Florida, but the windstorm insurance and the eligibility to even have the property insurable can 100% kill the deal. It's been getting better recently due to, I believe, higher liquidity in the reinsurance market. As the economy starts to tilter a little bit, a lot of money goes into the reinsurance market because it's usually it's a guaranteed source of maybe 4 or 5% return. So when the economy's shaky, reinsurance prices actually go down. When the economy's booming and they can find 10% return in almost any investment, money comes out of the reinsurance market. That drives the price of reinsurance up. But luckily, depending on what side you sit on, right now the market is trending towards positive news for reinsurance pricing, at least in South Florida.
Okay, that's interesting. I'm gonna let that one sit right there. So, um, okay, so it clearly what I heard was shop your insurance. That the decision and the matrix is different per provider, per region, per area, per hazard, and I don't. And there's really no standard. I remember, Madeline, we were talking about this, that it's akin to sort of neighborhood boundaries. Um, that masterclass I did on major neighborhood boundaries, that there's no one quote unquote government source of information. There's no one actuarial table to look up, right? So this really means that consumers need to be advocates for themselves. A friend of mine bought a house and found out it had flood insurance and really shopped around pretty aggressively to try and get the best rates. Madeline, how much do you feel, being a Floridian broker, that you guys need to be upfront about it? You need to market towards it. You need to be forward on the marketing of the property. And then Cal and I will get a little bit into talking about data that's out there. We'll move to the portals next, but specifically towards the brokerage attitude and the way. And I know, Lauren, you work really closely with Seven Gables, so you can probably speak on behalf of Seven Gables as well.
Yeah, so I think we've gotten to this point where education is power, and it's not that more information is necessarily better. It's giving consumers information that's actionable. So Ryan and I actually had a call earlier today about creating consumer guides and content around hurricane season. And so to be able to get general level information about these events and things that you can do to mitigate or make your house more insurable, and having really real estate agents be able to not only deliver that content, but then they're not the experts on the quotes, or insurance brokers have the connections to make the introduction so that consumers can shop around. And that starts at the very first conversation. So I think we've gotten to a point where it needs to be more proactive than reactive. Because if we're not the ones sharing the information, we know that buyers and sellers are getting it elsewhere.
Yeah, I think that's entirely correct. I love that comment about being more proactive and reactive. I think it largely has been a reactive. Realtor.com was one of the first, and so was Redfin, to really show climate data. And there was a little blowback in the beginning, not anymore, but concern towards flood by agents. But the truth of it is like, it doesn't matter whether you see it on the portal or not. At some point, there's going to be flood insurance, right? So, I mean, people have to know. They're going to find out sooner or later, in my humble opinion. Lauren, what about for you with on the brokerage side?
I have to third that. I love
Okay,
that
that's
comment. Yes, that was just so spot on. I've seen a shift, especially, with Seven Gables. They are so proactive, which I cannot give them enough kudos for. But so they're doing this NHD report. We partner together, so agents will reach out to me. They go through all the steps. Does it need flood insurance? What's the home insurance cost going to be? Fire zones, of course, huge here. So is it going to need a separate fire policy? What's the cost of that going to be? On top of it, I'm shopping around. So, the market's already shopped. They're coming to the table with everything ready. And I'm running what's called a clue report. So it's basically just the loss history report for any claims. So we'll see if there's been past flood, water, fire claims. So
Oh, that's really
a buyer stepping up with basically all of the knowledge possible.
I do think some of the brokerages and franchises are embracing it a little more aggressively. Like Cal and I just are providing that data to Remax. Royal LePage has been showing it for a real long time in Canada. It's much more front forward in Canada. This is my little promotional moment, but it also happens to be true, which is the IO reports that Local Logic provides have climate data in it. Manage sections on our report, so you can take sections out. I was thinking, okay, the first thing they're going to want to remove is if there's any flood, you know? But in truth, actually, they don't seem to be removing sections, and they seem to be embracing the display of the climate data in the report that they give to the consumer. I really didn't, it's not that I didn't want us to do it, but I wasn't sure how it would be perceived. And it really does seem to be embraced by the agents and the brokerages in those reports, which means, and look, those reports are sent out really early. My point is, it's going to be there right to your point, Madeline, right in the beginning. It's proactive information. So, Cal, as far as some of your experience with being on some of the portals and things like that, do they look at it as affecting, do they not, insurance, or are they just more like trying to take this proactive educational stance that Madeline was really talking about and just saying, hey, there's climate risk associated here. The rest of it's up to you.
And I think there's always going to be folks who transactionally say, hey, this is creating friction, right? We're trying to sell a home, and now there's one more thing, long list of things we have to do. I'd say the other side of it is how we started this. Consumers are aware of these events. They want to know about it. They want to be protected. And I'd say all of the portal integrations, including First Street's one with Zillow recently, are ultimately consumer driven, right? Consumers want this information, want to see it next to the listing. And I think that's empowering. And there's lots of different information. Sometimes it can be conflicting, but a consumer's not stupid, right? They can use this as kind of a red flag, do further investigation, understand what's actionable. And I think they deserve to see it all. So I think it's going in the right direction. Because ultimately they're carrying the cost of this, right? Through insurance premiums, through losses, and we're seeing it in maybe some defaults in the lender side, at least a delinquency in payments. So I think there's the whole ecosystem is affected by these events, and I think it's good.
And I wouldn't say,
If I can add to that, I think we're entering the next AVM moment. So back when consumers first saw estimates and what's your home worth, it caused confusion and friction, and the numbers aren't matching up. But these risk scores, it's essentially the same thing. It's an algorithmic based data point that's meant to inform. And so I think, what can brokerages and agents do? You don't dismiss it, you contextualize it. So you bring in insurance experts, you talk about what a seller has done in upgrades to protect their home. And it's really just an additional data point in the conversation versus an end all be all score.
I think I know we talked about earlier. I'm glad you reminded me. I do think this is like an early iteration of AVMs. I know we were arguing it a little bit because I was like, well, the AVM doesn't directly cost the consumer money, but in essence, it does really. But I do think it's about displaying as much information as possible, whether it's climate, neighborhood information, whatever, to the consumer. Like sometimes when we're selling our scores, I just finished a call with a broker and they're like, well, if it's a rural area, what do we do? Is that a negative? And I'm like, no, if it's quiet, if it has a high quiet score and a low vibrancy score, that means it's a rural neighborhood. That's real. We can't gloss over everything, right? And more than likely, you're going to get those buyers that want a quieter area. And same for me. I'm in a not quiet area. I chose a vibrant area. I understood that because my Starbucks is across the street. And that's what I needed. So I understood those trade-offs. So I do think it's about honoring and the consumer in terms of their ability to digest this information. Somebody was going to say something, I believe. Was
Yeah,
that you,
I was
Ryan?
going to jump in briefly and say I absolutely believe that the consumer would like to have this information. There's been times even in the last 6 or 7 years, or during COVID especially, where there was many people that were paying more per month for their insurance than the cost of their mortgage. So the people in Florida are very in tune to what the insurance cost is today. And to Cal's point, the insurance just cares about the next 12 months. But they also do want to see how is that going to project into the future. Well, I did want to hit on earlier when you spoke about the process and how the brokerages are taking it seriously. The day that something goes into our system, that there's a transaction taking place, we go through and we quote to make sure that property is insurable. Hopefully they're going to use us as their broker, but if not, we want to at least be able to relay that to our associate. So it is a very important part of the process. I'm sure it's very important in Florida. I'm sure it's very important in California. It's like the deciding factor in many cases on a home. Traditionally, what we tell realtors is if you're going on a Saturday to look at 3 or 4 houses, send us the addresses beforehand, because there could be thousands of dollars in difference on an annual basis between one property or another. You could have same purchase price, maybe one's 4,000, another one could be 16,000. You could have a home that was built in 1992 that is $50,000 less than the house that's built in 2020, but on a monthly basis, when you factor in those insurance costs, that more expensive home is costing you less on a monthly basis. And when it comes to insurance, you never get that money back. So it's not like you're investing into that over time. So it is very important for anybody that's purchasing a home in any of these high risk areas that they are being shopped, they're giving good advice from the beginning all the way through the purchase, because it is in most cases the second most expensive after the mortgage on any particular property.
Thank you for that. And I think it's true. And I guess, Madeline, I would say I wonder how often it bounces people out of the transaction. And same for you, Lauren. Do they then immediately go down the street to a slightly higher ground? In other words, look, if you go to Florida, you know what you're getting into. You go to California, you know what you're getting into to some degree. But if you're really talking about areas that are maybe like North Carolina or something, maybe it's a little more nuanced. How often are you dealing with people being like, no, I can't afford it? And then there's no recourse, like no matter how much you shop it. Because I don't think there's a lending. I don't think there are lending vehicles for flood insurance, to my knowledge. There are lending vehicles now to pay the buyer's commission, but not necessarily. And will we go that direction? I mean, as climate becomes a bigger thing and a bigger part of the home transaction process, will we see people borrowing on it? Can they? And they can't roll it into the mortgage, I don't think, right? So they can't I don't think they can roll the cost of the mortgage, can they?
You can escrow your insurance payments, and you can do some premium financing, but that's not really for residential homes, at least in Florida. That'd be more for commercial properties. The number one cause for people leaving the state of Florida is property insurance. During COVID, the pricing went up. We had people calling us, hey, I just simply can't afford it. Luckily, because of Florida and California, there's so many people that want to move into it. It's not it's not killing the market, but for most of the people that are leaving, they're leaving because they don't want to pay property insurance anymore. It was that expensive for a while.
What about you, Lauren and Madeline, just on that note real quick? How much do people bounce, and do they,
So, from my experience, so in California, we had this mass exodus of insurance companies from the market. And then in order to entice them to stay or to come back, the insurance commissioner allowed them to increase rates way more than normal. Usually it's like a 6% cap or something like that. Because it was a state of emergency, they were raising rates like 50%, 60%. So right around that time, I saw a couple of, people get sticker shock and shy away from purchasing homes. But I have to say, it did not last very long. People very quickly acclimated and kind of got used to or accepted, like, okay, well, now insurance costs this much. And they expect now higher premiums for a fire zone or to have to pay flood insurance and that kind of thing. So it didn't last very long.
All right, so we'll wind up here shortly, but I want to say, Madeline, on that note, and then I'll go to Cal last, is it kind of ebbs and flows with the climate events, right?
I think we have short-term memory loss, but we also don't underestimate the power of resilience. So resilience sells whether you're talking about a home or buyers. And so, yeah, if you're able to, when you're looking for a home, not just think about what home do I want to be in, but what's my total cost. And I think the other side of it too is what can you do to reduce your insurance premium? Like the My Safe Florida Home program, right? We have buyers that buy something and maybe at the time of the purchase, it's not necessarily their ideal transaction, but they know that through their investments, they can make their home more insurable.
That's so interesting. We haven't talked about that at all. So maybe I'll round that up with Cal. In your being the purveyor of data, is to link it to, because there are things people can do, right, to decrease. I think you mentioned it, Lauren, yesterday. Like there's things people can do to make it less susceptible to fire, less susceptible to wind. There are things people can do that would either make it insurable or reduce the premium. So Cal, I think you guys should start offering that information as part of your data, or do you see it as more hands off, and where do you see it going generically?
Oh, I mean, I think that's really kind of the reason for the data, right? Help folks understand where they have exposure to risk, how vulnerable they are to that risk. And then that's step one, step two. And then step three is how do you protect yourself, right? And there's all sorts of great resources. And this is kind of where our world intersects with the insurance world, because a lot of these things we're doing to improve our properties, whether it's clearing brush around the property to reduce fire risk to the home, or installing better roof gutters, whatever it may be. I think all of that stuff can help with an insurance and helps kind of protect your asset over the long term. So I think more information, identify risk is good, and then figuring out how to adapt your home for maybe
Especially for these areas. I love that. I'm going to conclude on that, but I love that because I don't think we're doing enough on that front, actually. And maybe I'm just not as aware, and companies like Kai's or Seven Gables that are in sort of quote unquote hotspots are doing more on that. But I think it's an interesting thing for the portals to explore, brokers, franchises, any of the sites that are really involved in the transaction. If you're going to put up climate risk data, maybe it should be equally as available on tips and tricks. I mean, when I had a home, I have a condo now, but when we were in a big old home, it would have been nice and interesting to be aware. So if people are more open to climate, like through our data or yours, Cal, or whatever, right, or through you guys, through the brokerage, if they're open and they're not as scared, then let's take them to the next step and help them negotiate. I love that you guys as insurers are negotiate, get educated. It differs. The matrix is different. I think that's so interesting. But there's also things you can do to bring the premiums down. And I think most people are absolutely not aware of that. Well, thank you guys for joining. We always say that the masterclass goes for as long as it goes. So we'll give everybody a little time back. And I thank my panelists for joining us. And I hope that on Earth Day, you get to experience your favorite weather today. So thank you guys. And I'll talk to you soon.